आजकल मार्केट में रिटर्न्स अच्छे मिल रहे हैं,
पर इक्विटी में रिस्क ज्यादा है।
डेट में स्टेबिलिटी तो है, पर रिटर्न्स का क्या?
ये टेंशन फ्री है क्योंकि इन्होंने SBI बैलेंस एडवांटेज फंड में इन्वेस्ट किया है, जहां एक्सपर्ट सब संभाल लेंगे। हरी, NFO closes on 25th August. Mutual fund investments are subject to market risks. Read all scheme related documents carefully.
आग को फैलने से रोकना मुश्किल है, पर नामुमकिन नहीं। अब फायरवॉल टेक्नोलॉजी के साथ सेंचुरी प्लाई आग से बचाए।
Welcome back. You're watching Buy Now, Sell Now, and quite a few of you have tuned in on social media and in fact are sitting in your living rooms and watching this on television, and you've already sent us your WhatsApp messages. By the way, I'm going to ask my colleagues to just flash that number on the screen in case you don't know it. Just save the number and send us a WhatsApp text if you have a question. I do encourage you to tell us your name, and also if you've acquired a stock and would like to have the experts tell you about it, tell us at what price you bought it and how long you intend to hold it for. We've got the first question coming in from Homi today. Homi has purchased 80 shares of Dixon Tech in an average rate of 4,300. Homi points out that the price has been falling continuously. Rajesh, the question is, should Homi hold or sell or even average at this juncture?
Alex, which one was the stock?
We're talking about Dixon Technologies. Homi points out that he can hold for the very long term.
See, one can continue holding for the very long term because the stock is showing some amount of correction in the recent past because of two things. One, the entire market is facing a correction, especially in the mid cap and a small cap space. And secondly, it has run up quite a lot, making the valuations a little bit stretched. But with the kind of PLI schemes and with the kind of focus on indigenous manufacturing of mobile phones and other white goods, I think this company has got a good future going ahead. I would not suggest adding at this point of time, but one can continue to hold.
Okay, this one is coming from Kunal Kaushik. He wants to know whether it's good time to add KPIT Tech. He is already holding about 100 shares, which he's purchased at 248 rupees per share. So he wants to know, is there more correction in store for this counter, and when should he add more? Kunal, what's your take coming in on KPIT Tech? Makes sense for Kunal Kaushik to look at it right now?
So I think it should be a good, buy in terms of long-term portfolio. Now, since you've bought at a price around this 248, 250 odd mark for KPIT Tech, and the stock is already up more than 20-25% from your costing, I would believe that you can wait for some more time before the stock goes through one more round of correction. What has been happening is many of these mid-cap stocks have gone through such overbought territories that a correction seems to be due into many of these names. Now, whenever that correction happens, it could be more structural into these spaces as well. So you don't need to be in a hurry to try and jump into these names. For example, for KPIT Tech, the 50-day moving average is at 277 to 78 levels. So let the stock correct a bit more, come back closer to its 50-day moving average or slightly lower than that. I think that would be a good level for you to average rather than at current levels.
Okay, let's pull up ONGC next. We've got a question coming in from Sastamani from Coimbatore. The viewers are holding at a loss of 16 point, or rather is incurring a loss currently of 16.4%. As I understand it, Rajesh, this is an intention to hold for the long term. Should this be something that you hold in your portfolio for the long term, ONGC?
The way crude prices have corrected in the recent past, or with the exception of yesterday, I think there is pressure. There is going to be a pressure in these kind of stocks because, again, the third wave and all those news are trickling in from across the world, and that it's expected that demand would go down. So for a very long term, maybe 3 years, 4 years down the line, if somebody wants to hold with a good dividend yield, yes, it's a good stock. But for medium to long term, short to medium term horizon, I think there are better picks. Maybe in the oil and gas space, you have better names like BPCL or a Gujarat Gas, where one can switch.
All right, this one is coming from Soumitra. He wants a view on Aarti Drugs as well as Sequence Scientific. In fact, he wants to know whether he can add more of Sequence Scientific at current levels. Kunal, either Aarti Drugs or Sequence Scientific, which one would you want to give your view on? Soumitra wants to know if it's Sequence Scientific, can he add some more at current levels?
See, I think both these stocks have fallen from their 3-month highs. I think Aarti Drugs of course, has fallen a bit more from those 840-50 levels to sub 600 or just about 600, where the stock is trading as compared to Sequence Scientific. But the chart patterns are a bit different as compared to the more corrective wave which you've seen for both of these names. Aarti Drugs, for example, is almost 100 rupees lower, more than 15% lower than its 200-day moving average, and Sequence Scientific on the other hand is just about touched its 50-day moving average after this couple of months of correction. So I think in that sense there is an added advantage and an inherent strength which is there in Sequence Scientific. So I always look to recommend stocks or look out for stocks which are more stronger and sturdier as compared to the other peers, because then there is a higher probability of the stocks making a bounce back much more stronger than the weaker ones. So in that sense, I would suggest that Sequence Scientific is what we can look at in terms of averaging rather than Aarti Drugs.
All right, I'm coming back to you, Kunal, on this next one. We've got Deepak from Bangalore who's asking about Biocon. He's holding at levels of 386. He says he's been holding since the last 6 months or so. He's asking if we should exit or add more at this juncture, and he has a time frame of 3 months.
That you should have an exit strategy over here. In fact, even while when you've taken a trade, and assuming if it's a short-term trade, you need to have certain degree of stop loss for that trade, because it becomes very difficult to try and hold these stocks when there is a very strong wave of correction which comes by. So for example, Biocon has shed almost I would say 85 rupees odd in the last 1.5 odd months, from 420 levels to 330 or thereabouts, which the stock tested yesterday. So the correction has been very intense. In these kind of corrective waves, you should wait for rallies to try and exit the stock. So if you have, for example, today the stock has bounced up 3.5%. If you see another bounce back towards 360, 365 levels for Biocon, that should be a level where you should look to exit rather than build up positions.
This one is from Kaustubh, and he wants a technical view on Maruti. He's already holding about 10 shares at 7,000 rupees per share. He's saying the stock has corrected a bit, so can he add some more for the longer term? Kunal, what's your view on Maruti? On the charts, makes sense for Kaustubh to go ahead and add some more?
See, I think if it's very clear on its view in terms of holding, if it's long term, then I believe that he should definitely look to buy or average depending on his existing stance or portfolio in terms of the pick on Maruti. Because it's very important to remember that when you're looking at large cap quality stocks, they will have their own periods of consolidation, some issues which are happening in terms of fundamental, etc. But these stocks have which have proven their mettle over the last so many decades and so many years. They stand to come out first and give you that tad bit of outperformance when you look at it from a longer term play. Maruti has been consolidating from 8,000 levels, which was seen just about 5-6 months back. The stock is now sub 7,000 levels, so it's already corrected more than 15% from those lows, from those highs as well. So I think it's a good time to try and chip into Maruti, depending, as I said, on your existing holding. If you're not invested into it, then I think you should buy a larger chunk of your quantity over here. But if you've already bought at higher levels, then I think these are good levels where you can look to average as well.
All right. Intraday, of course, Maruti Suzuki bearing the brunt of that negative CCI order. All right. Let's talk about Bharat's question coming in from Hyderabad. He's asking about Route Mobile, and this one's for you, Rajesh. He's bought at levels of 1,978. He's asking whether to hold on to the stock or switch to something else.
See, I think even after this kind of correction which the stock have witnessed, it's still the valuations are stretched despite the fact that it's in a very exclusive kind of business where mobile apps, not only they have clients in India but also abroad, but still the valuations are on a higher side. It will be better to sell at this point of time, maybe re-enter it if the stock corrects by 15-20%. As far as another stock, switch to another stock is concerned, I would say there are good names in IT, at least at this point of time, maybe a Tech Mahindra or Infosys would be a better bet. Infosys with the negative news flow has come under some pressure. It's not performing as well, but given the fact that the numbers have been good, I would say one can go along on that.
All right, this one is from Suman Agrawal saying that he's holding about 40 shares of Redington at 170 rupees per share. Should I continue to hold on to the counter? Rajesh, what's your view on Redington? Should Suman continue to hold on to this counter?
Of course, one can hold on to the counter. All the divisions, including the logistics one, is doing very well. They have recently given a 1:1 bonus. The dividend outgo was very good. And even in the coming 2-3 quarters, we expect the counter to do well. Hence, one can continue holding to this stock.
I think the next question, Kunal, is a little bit of a broad question. This is from Ravi, and he's asking, he's named a few counters, but he's asking anything that can be bought from counters that have corrected in the recent past for a strong 25% upside. I remember the stocks that you were talking about on the Chartbusters segment. You said that HDFC Bank for you was a strong buy. Would that be a counter that you would advise?
Probably give more weightage towards large caps in this leg of the market rally, Alex, because what has been happening in the last 14-15 months, the small caps and mid caps have just about gone through very overstretched kind of rally. So it's bound to be that these stocks correct, and the correction may not just be a very linear correction. It can go through very complex kind of corrections where you might see many of these stocks going through a corrective wave, then a minor bounce, and then one more round of correction. So it's going to be very difficult for short-term traders as well as market participants to try and figure out which are the stocks which can try and bottom out first and then rally, because it's going to be a bit more complex. But on the other hand, I would sense that large caps will keep on outperforming, and there are two names which I think you could be looking at, maybe 2 or 3 names which you can look at from current levels as well. HDFC Bank, which we discussed in the Chartbusters, looks very attractive. I'm expecting more of a monthly pattern breakout for HDFC Bank. Reliance Industries, the stock which I just discussed on this segment as well, and the chart patterns, I think it's just a matter of time that the stock would break out of this huge consolidation, and whenever that happens, you can expect a multi-month up move for Reliance Industries. And I would probably add even maybe in SBI or ICICI Bank, even at current levels, both these stocks have managed to withstand and shown their leadership qualities in the last 14-15 months for the banking names. And I think both these stocks, they would stand to outperform if there is any recovery into the bank nifty overall as such. So I believe these are the kind of quality large cap names which you should be eyeing from a long-term perspective.
Okay, this one has come from someone with the YouTube handle name as Real Fact Trends. Next time, Real Fact Techs. Next time, please do mention your name as well. His query is that about InSwift Lab. He's already bought about 301 shares at the price of 96 rupees per share. He wants to know what should he do going ahead. Kunal, how does InSwift Lab look on the charts, and what should he do?
It's a weak chart. In fact, this is what I was indicating earlier as well, Cheryl, that there would be many mid-cap names which could go through 10-15% correction. There would be some which can go through maybe even 40-50% correction as well. InSwift Lab, I think just about last month or so, the stock was at 125, and currently the stock is at 57-58 rupees. So that itself tells you that there is inherent weakness in the stock price, and it's a stock which should not be part of your long-term portfolio. These are the stocks which you can keep on trading, but you need to have strict stop losses in these kind of stocks. So I would advise an exit, or maybe you can wait for some sort of a bounce back into these names and try and exit on any kind of a bounce back.
Okay, I think that this is a question that we have taken in the recent past, but I'll still come to you on this one, Rajesh. We've got Rajan from Bengaluru who's asking about counters like, say, Oro Pharma, like Lupin. He's pointing out that these counters have seen a bit of a knock, or pharma counters overall have seen a bit of a knock in the recent past. should you still hold on to them is the question, or would you use this opportunity, for example, to add more?
Alex, as far as Oro is concerned, definitely we have a buy call in this, and we would advise to add more because of the fact that it has corrected quite a lot because of negative news flow last week. It showed a kind of deep cut. And when we talk of valuation, it's trading at a huge discount to its peer group companies. Hence, Oro can be bought with a time horizon of maybe 9 to 12 months, where we believe that from the current market price, 20-25% upside is quite possible. As far as Lupin is concerned, that's also a good company, and the numbers have been quite good. But at the current market price, we won't suggest to add. Maybe a 10-15% correction from the current market price would be a good opportunity to add. At this point of time, maybe a Cipla would be a better bet, maybe for a target of 1,200 odd rupees in the next 1 year.
Okay, this query is coming in from S. Damodar. He's this is also on pharma space. He's already holding Alembic Pharma at an average price of 940 rupees per share. He wants to know whether he should hold or exit or look to accumulate some more. What's your take, Kunal, on Alembic Pharma? What should Damodaran do?
Stock and look at large cap pharma names if you are, if you wanted to stay in the sector. I think something like Sun Pharma at current levels of 760, 770 levels, I think could be an attractive buy from a medium term to long term perspective. The stock has just about recently managed to show signs of strength and outperformance as compared to other large cap peers. Or else, if you're looking to buy other large cap names, then I believe Dr. Reddy could also be looked at. You can look to buy the stock in stages. The stock had a negative news flow some time back, and on the back of it, it's already corrected more than 10 to 15%. So these are the kind of opportunities which you could be looking at. I would suggest a shift from Alembic towards Dr. Reddy or Sun Pharma.
Okay, let's take another question coming in then from Riaz Merchant. He's got HFCL, which he's holding, and he's got a significant number of shares, Rajesh, as many as 30,000 shares, which he has bought at levels of 57 for the long term. What advice would you give him?
Various stories going around for HFCL, their 5G play, some big corporate taking over and all those things. The numbers have been good, but still the kind of controversy the stock has seen in the past, I think institutional investors or HNI investors are wary of that. And they wouldn't vouch into this in a hurry. So it's better to exit at this price. It has run quite a lot from 60. It started from 16 odd rupees, went up to 80, 85 rupees. Now trading at a discount to this 52-week high. But still, I think one should try to exit at every release.
Okay, this one is from Lasya Murugadas, wants a technical view on BHEL. She's holding about 1,500 shares of this counter, which was bought at around 68 rupees per share. What to do with this particular stock? Kunal, what's your view coming in on BHEL? Makes sense to continue to hold on to it?
Can hold on to the stock, even though the recent in last 3 months it's gone through a correction. What the stock is also going through is a process of mean retracement or mean reversion, which we typically see when stocks they rally up very, very quickly in a short span of time. So I think in that sense you can continue to hold on, but I would sense that the better part, if you're looking to average it out, should be when these stocks they tend to give you breakouts, because whenever the stocks give you breakouts, the momentum is very quick, very swift into these names. And the extent of short-term profits, even if you're looking at it to try to make into these kind of counters, would be a more higher probabilistic trade at the breakout point. So I would suggest to wait out on BHEL at current levels, and if the stock manages to surpass about the 65, 66 levels, I think that could be a good level where you can look to average it out and then hold on to it from a medium-term view.
Okay, Rajesh, I'm coming to you on this next one. We've got Santosh from Chennai who's holding Adani Power, and he's holding as many as 1,000 shares. I do not know what price he bought those shares at, but he's asking if it's worth holding for the long term.
See, the kind of correction the stock has witnessed is really surprising, almost 50% from its 52-week high. But at this point of time, the valuations have become quite favorable for an investor to continue holding, just because of the fact that it has very large capacity in power, not only in thermal, but also in solar. And they are trying to expand that. So I think at this point of time, one can continue to hold.
Okay, this one is this one is coming in from Sagar. He wants a fundamental view on Ultratech and Ambuja Cement, both in the same pack. He's saying his father has bought about 50,000 shares around 2010 for around 500 levels. This is for Ultratech, and Ambuja at around 75 rupees per share. So he wants to know if Ultratech can reach the 10,000 rupee mark and if Ambuja will reach 500 rupees per share mark. But on the fundamentals, Rajesh, do you see this as a possibility? Does it make sense to stay put with Ultratech and Ambuja with the hopes of them rising to those levels going ahead?
Which have been mentioned is quite difficult to say at this point of time, but one thing I can say that both of the counters are fundamentally very strong. Especially if I talk of Ultratech, the kind of capacity the company has, they're trying to expand their capacity. The numbers have been pretty good for the last 2-3 quarters. And the kind of government focus on infrastructure and all cement and steel are going to do well. Ultratech being one of the larger players, it's a must have in one's portfolio. Even the gentleman holding is holding at a very good price, and he must continue to hold unless and until he has some needs of fund. And other viewers who are watching our channel at this point of time, I would suggest one should definitely hold Ultratech in one's portfolio. And if it's because of its high price, if somebody thinks that's already high price, one can hold Grasim, which again is a holding company for Ultratech. So it's a buy from our side on Ultratech for a very long period of time. As far as Ambuja is concerned, I think one can have an exposure onto that, but I would prefer Ultratech.
All right. We've got a question from Shivraj from Bangalore as well, and this is a question on Union Bank of India, and this one's for you, Kunal. Holding at levels of 37.5 and looking for a time horizon of about 6 months. What should they do? What should the strategy be here?
See, I'm always an advocate of more large cap names in portfolio, even if it's a medium term time frame. The rally for mid caps and small caps seems to be getting a bit more exhausted. I would suggest to switch from Union Bank towards large cap PSU quality PSU names, and that would be to SBI. So I think that would be a much more better prospect, and then it can increase your time horizon as well from 6 months to at least a couple of years, if not more.
Okay, quickly this one, Kunal, UFO Movies, do you cover this particular counter? Anuradha has bought about 306 shares. She's actually been allotted UFO Movies at IPO at around 306 rupees per share. Is it good unlocking bet, or should she average at current market price? UFO Movies, Kunal?
Unfortunately, don't track the stock, Cheryl, so won't be able to offer any comment.
All right, let's go to another question then. We've got Krish asking about Vinati Organics, which was bought at levels of 1790. Kunal, would you say that they should hold on?
I think yes, Vinati Organics seems to be a much more stronger stock, done phenomenally well over the last 12 months. You look at it over the last 5 years as well as over the last 10 to 11 years as well. So I think it's a good stock to hold on and be a keeper in terms of long-term portfolio. The stock has also corrected in the last 2 months from 2100 to 1800 plus levels. So you can look to average, or else you can look to hold depending on your cost price.
All right, now time for the rapid fire round that we have in on this particular segment. Kunal as well as Rajesh will be asking you a series of questions, and please do keep it very short, either buy, sell, hold, avoid, and also maybe a rational with a short sentence. So let me get going with it, and this one is coming in from Neeraj Kumar 500 shares of XI, which is purchased at 162 rupees per share. Makes sense to continue to hold on to it, or what should he do, Kunal?
I would suggest an exit.
All right, the next one's from Aurobind. This next one, sorry, is from Chandan. Again, this is on Aurobindo Pharma, bought at levels of 880, hold for the long term or book losses. This one's for you, Rajesh. I think I know the answer.
See, I have already answered this Aurobindo just now, and I still believe that one should carry on with the stock, and if the funds allow, one can even add.
Right, this one is from Prashant Kumar. He's already bought Snowman Logistics at 57.2 rupees per share. Wants to know whether he should sell or stay invested, Kunal.
I think that the stock has been an underperformer compared to its other peers. I would suggest an exit.
Okay, a question from Uma. I believe this is Amara Raja. Is it a buy or sell at this juncture for you, Kunal?
I would suggest that you can look to average at current levels, so start at current levels, but then keep some powder dry. I think the stock can go through one more round of correction. That is the level where you can look to average it out further, say somewhere close to 650, 640.
Alright, this one is coming in from Luke. He wants to know whether he should get into Shree Cement at current levels. He's aiming to get some good gains from this counter. Does it make sense, Rajesh, at this levels to look at Shree Cement?
No, I won't suggest entering at this point of time. The numbers were not that good. As we discussed, one can look at Ultratech in the cement space, or in the mid-cap cement space, Almia Bharat would be a better choice.
Very quickly, why Sahai asking about DLF, bought at levels of 323. Should they hold on, Kunal?
Well, yes, I think you should hold on and look to average as well, assuming if the stock comes to 285.
All right, and with that we come to the end of the rapid fire as well as the
Go ahead, Charul, go ahead.
So as I was saying, with that we come to an end of the query segment as well as the rapid fire. Thank you, Kunal, as well as Rajesh, for joining us on the show, giving us your take on Reliance Industry, resolving viewer queries both on the social media handles as well as WhatsApp. And time for a break on this edition of Buy Now, Sell Now. But stay tuned, lots more lined up for you after this break, so don't go anywhere.